Good afternoon and welcome. My name's Kevin Igoe, Managing Director of Professional Fee Protection, and I'm delighted to be joined today by Helen Thornley of the ATT. Now, Helen's going to be covering some aspects of the impact on the UK Trust Register and the changes that are undergoing at the moment, and this is a field that we've had quite a bit of interest in. Hence, over 300 have come along registered for today. So, Helen, if I could firstly ask you to perhaps say a little bit about yourself and your background.
Hi, yes, thanks, Kevin. Yes, so I'm a technical officer with the ATT, the Association of Taxation Technicians, and I used to work in practice, so I've been in this role for 4 years, and prior to that I worked up, I live up in Cumbria in the north of England as a private client specialist. But I've spent the last 4 years with the ATT, and it's a really weird role. So I don't have clients, I work purely in kind of tax policy, and we comment on consultations and legislation. And I've been really involved in the Trust Registration Service since it was first created back in 2017. And there's quite a few groups where we go and we represent the views of our members to Hmrc and kind of highlight issues and concerns and the things that we need clarifying. So I'm very much on the kind of theoretical side of things, and then I rely on members to tell me what's happening in the world and what does and doesn't work in practice with these services.
Okay, great. Thank you very much. So I can let you all know that we will be sending slides around at the end of the webinar. And also, as usual, if anybody would like to ask a question, Helen has said to me beforehand, you know, the more difficult, the better. I think, Helen, can you check your sound? I think we've had a couple that can't hear.
Oh, right.
I can hear you very clearly.
I mean, I'm showing as green and that everyone can hear me. I've got an audience view thing, so I think, oh, that is audience view, right.
Okay. Yeah, we've got some saying they can hear it, so thanks for that, Melanie. Yeah, so yeah, without further ado, I'll hand over to you, Helen, and away we go.
Lovely, thank you. So yes, as Kevin said, title of today's talk is the impact of 5MLD on the UK Trust Register. And I will start with the usual disclaimers. A little bit of an additional disclaimer on this, that although the legislation came out last year, the new legislation extending the register, it is still a bit of a moving target. I'm expecting changes to regulations to be laid later this year, probably in December. We're working on the guidance, and there's still aspects where Hmrc are working on the processes and systems. So this is as much as I know as at today, and it is going to continue to kind of evolve and change as we develop and sort of come to the kind of, I suspect we'll start to see a few more changes early into 2022. And I thought it might be helpful before we kind of launch, just to kind of give a kind of headline of kind of what I want to look at. So hopefully you're all familiar with 4MLD and the initial introduction of the UK Trust Register. And then following further EU legislation, which came into force before we left the EU, so before Brexit, and thus we have had to incorporate into our own regulations, we had what was called the 5th Money Laundering Directive. And again, the purpose of this is to kind of increase transparency and address money laundering issues and the feeling that trusts were being misused. And so they wanted to tighten up and increase the number of trusts on the register. So we've got a much wider range of trusts that we now need to include and add to the register, in addition to ones we've already put on there. We then also have extended information requirements for taxable trusts which are already registered. So anything that you've already got on the register, if you've not already, you're going to need to go back and add more information to. And then finally, the really big change is the extended rights to access information. So the current register, or the register as was under 4MLD, was only open to legal sort of police authorities and to Hmrc, but it's now potentially open to a much wider range of people. So those are the 3 areas I want to look at. I thought before we kind of launch, it would be helpful just to kind of restate where we are and have a look at the recap of the rules under 4MLD. So these are the ones that say that they were introduced in June 2017. which feels a really long time ago now, as a part of the 4MLD, so the Fourth Money Laundering Directive, which is an EU directive. And they were brought into the UK as part of the Money Laundering, Terrorist Financing and Transfer of Funds, brackets, Information on the Payer, close brackets, Regulations 2017. And under these rules, only taxable relevant trusts needed to be on the register. Now, it's need to kind of define each of those terms. Well, a relevant trust is, for a UK trust, generally means it was defined as an express trust, so one that was deliberately created. So we're not talking about constructive trusts or anything kind of complicated. That generally means there's a deed, it's fairly clear that it's deliberately created by a settler, and it's not arisen under operation of law. Because sometimes under English law, trusts will arise just by the way that the law is drafted and not because there was a particular intention between the parties to create ones. A UK trust in this context means a trust where either the trustees are all UK resident or the settler was UK resident when funds were added or the trust was created. And then taxable meant that the trust had to pay one or more of income tax, capital gains tax, inheritance tax, one of the various stamp duty land taxes, depending on where you are within the UK, or stamp duty reserve tax. It was also possible to require non-UK express trusts to register if they had a UK income source or they had UK assets with a UK tax liability. I'm not generally going to focus on the non-UK trusts. I'm mainly going to focus on UK express trusts. And in terms of having a tax liability, oh, sorry.
So you had a quick question here once you're talking about the sort of trust that would be covered, Helen, or should be included. Peter's asked the question, he has a client company that's owned by an employee ownership trust. Should this trust register?
That's an interesting one. I have to confess, it's not one I've ever thought about because employee ownership trusts weren't something that I ever dealt with. So, I mean, I'm assuming they're a trust because there's a named trust in the title, although that isn't always, just because something's given the name doesn't necessarily mean that it's, I don't understand the sort of the structure of them enough to fully understand. I mean, I would suggest that it's the place to look would be to have a look in Hmrc's guidance. There is a manual, I've put a link at the back of the talk, which identifies all of the different trusts that needs to register, and I would feel more comfortable if you had a look there, because I have to confess I haven't thought about employee ownership trusts, so it's one I'd have to come back to, I'm afraid.
Okay, thank you. Mark, thank you, Mark. It makes the comment under 5 MLD, his understanding is yes, but I guess this thing is still to check. Thanks, Mark.
Okay, thank you, yes. Yes, so that's where we were under 4 MLD, and then under 5 MLD, we got some new rules back in October 2020. And so in addition to registering taxable relevant trusts, we now have to register a much broader trust. And effectively, all trusts are in unless they are specifically excluded. And there's also a much wider range of non-UK trusts. Now, again, I'm going to mainly focus on the UK trust side of things. So the new category that we've brought into scope here are what are called in the regulations Type A trusts. Now, we see that in the regulations. You won't see that anywhere within Hmrc's guidance, because there are reasons why it's not always very helpful. And a Type A trust is a UK express trust, so again, one specifically created, unless it's specifically excluded or it's already registered elsewhere within the European Economic Area. And there are a list of specific exclusions which we will come to later. And it's possible for a trust to move between these various categories. The most obvious would be if it acquires a tax liability, it would then become a taxable relevant trust. If it hasn't got a tax liability, then it remains as a Type A trust. And then just quickly, the Type B and Type C trust, these are non-UK express trusts. In Type B, either you've got, for a Type B trust, you need to have at least one UK resident trustee, and it either acquires land or property in the UK or it enters a business relationship with a UK advisor. And if it does either of those two things, it acquires an obligation to go onto the trust register. And that entering a business relationship was quite an area of concern, because a lot of people felt, well, a lot of sort of trust sort of advisors over here that perhaps specialise in offshore trusts wouldn't want to feel that they were pulling those offshore trusts into the UK trust register simply because they were advising, and the feeling was that if you said, oh well, if the offshore trust said actually I'm not going to use a UK advisor anymore, I'll go elsewhere, that they may not get the quality of advice that they would get from a UK advisor regulated under quite strict anti-money laundering regulations. So there is still quite a lot of work and discussion going on over this precise definition of what a business relationship is, but it is generally kind of centered on something where you've got a kind of ongoing engagement with the client. And then there's a Type C trust, so that's again a non-UK express trust, and all of your trustees there are non-UK resident. But if you're one of those trusts and you acquire land or property in the UK, then that brings you within scope of these regulations. And it does matter to some extent what category you fall into, just because it does slightly affect the rights of access that people have to make requests to see details about those trusts. So going back to our Type A trusts, so the non-taxable express trusts, UK trusts, there is quite a big list of trusts that are excluded, and I think for me this is where quite a lot of the complications are going to arise, kind of understanding what falls, whether or not your trust will fall within the excluded category. So step one will be identifying all of your trusts, and then step two is kind of going, well actually do we need to put them on the register? And given the nature of English law, trusts, as I say, they can arise not just deliberately, but also kind of constructively. They can arise in all sorts of commercial and private relationships. And so the extension of the trust register to all trusts could potentially be quite substantial. So the first exemption that's really useful is just in effect a kind of clarification of the fact that we're looking for express trusts. Any legislative trust imposed by statute is excluded. Now that, to me, as someone who isn't a lawyer, sounds fairly horrific. It's a bit complex, but what we're looking at here are things like trusts which arise under intestacy. Or trusts of land. So again, if you have more than one owner of land, you're kind of deemed to own it in a trust structure. But that trust structure, it's not express, it's something that was imposed by statute, and therefore it will be excluded. And that's great, because otherwise every couple in the country who owned a property jointly would be finding themselves having to put themselves on the trust register. And again, there's no benefit to that because land is already registered at the land registry. There's also a very similar exclusion for trusts imposed by courts or tribunals, so that may well be helpful in divorce situations, or again perhaps trusts that might come out of say a claim for provision of family independence following a death. There's also an exclusion of will trusts from which are for 2 years from death. One of the big issues that we have is with a will trust is as I'll come to later, you've got quite a limited period of time from the creation of a new trust to get it registered. Well, with a will trust, you need a little bit of time to establish what assets are going to be in there to kind of deal with the administration of the estate. And Hmrc have taken on board that you're not going to be able to register a will trust within a few months of death. So the idea is that if you get a kind of 2-year grace period, and then if at any point during that 2 years you put assets into the trust, when you come to the end of 2 years, you will need to register it. If you get to the end 2 years from death and you haven't yet constituted the trust and you haven't yet transferred assets, then I understand, and we're waiting for Hmrc to formalise this guidance and publish it on Hmrc on gov.uk, that you will actually get more time before you need to register. So if it takes you 3 years to get the trust set up and running from death, then I understand you won't need to register until it becomes constituted from that 3-year point. So this is potentially more flexible than it looks like, and we're just waiting for gov.uk to kind of put that clarity. So we've had some correspondence, but we want it shared on gov.uk so that you can confirm that position formally with Hmrc. So the idea is that the trust won't be required to register until it's actually commenced, and they're viewing that as when the assets vest in the trustee. There's also a couple of sort of special exclusions which will be helpful and are kind of needed because trusts on intestacy are going to be excluded automatically. Then similarly, things like bereaved minor trusts and 18 to 25 trusts will be excluded. And that makes sense because otherwise you'd have the position where if you have a will and you put a trust in it, you were going to need to register. But if you, so if you had one of these trusts like a bereaved minors trust or 1825 in your will, it would be inconsistent to have to register them because they'd arisen via a will, but you were letting them out and you weren't requiring to register them if they arose on intestacy. So we've not got complete equivalence between exclusion of trusts because between intestacy and if you do it via a will, but at least we have some kind of balancing so that it doesn't discourage people from putting trusts that are necessary or needed for family circumstances into their wills.
Helen, for just chip in with a question here from Cameron, just for clarification, a husband owns a property solely and has the mortgage in his sole name and is registered at land registry in their own name and does a deed of trust and gives half of the equity and income to his wife. Will this type of trust need to be registered?
It shouldn't do, because I think we're going to come to that later when we look at the co-ownership trusts. So what you're looking at there is going to be kind of a co-ownership, presumably. So if it falls within the co-ownership exclusion, then you wouldn't need to. So I'll kind of come to that as we go through this slide.
Okay, great, thank you.
Yeah, so the other kind of major exclusions are trusts of life insurance. Now, again, this is something where there's a little bit of movement. So what we've got in the current regulations, we are expecting some further changes here, which is why I've got it in red at the moment. So the current position is you've got a life insurance policy and it pays out on death. Then or terminal illness or permanent disablement, then there isn't a requirement to register it, which is really helpful because I think potentially there could be hundreds of thousands of these around the country. Hmrc originally said that if it had a surrender value, then you did need to register it. And they've subsequently said, actually, no, if it has a surrender value, that's fine. We still won't require it to be registered. And they're also looking at extending exclusions for health insurance policies. So we are expecting we're expecting some more guidance to confirm their position on life insurance policies in the next iteration of the manual, and we're expecting some regulations to add on health insurance policies to the list of exclusions. Registered charitable trusts are out, and also unregistered ones that have small incomes. You also don't have to register if you're a charity that realises it needs to register, but you haven't got registered yet. They understand there will be kind of a period of grace while you're going through the registration process. As long as you've got a reasonable expectation, the charity will be registered. And then there's a couple of sort of special cases with, say, pilot trusts. We weren't able to get, we did argue for a de minimis level, sort of say trusts below a certain value shouldn't be required to register. That wasn't acceptable. It didn't sit within the directive, but they have said that if you've got a pilot trust with less than £100 created prior to the 6th of October 2020, you don't need to register that. But as soon as you put some money into it, then you will need to register it. And then the final one that I'm going to talk about, there are other specific exclusions concerning sort of specific commercial situations that are worth looking at, but as that's not an area I worked in, I've not covered those here, but it is worth having a look at if that's relevant to you. Co-ownership trusts, so this is where you've got trusts of jointly held property where the trustees and the beneficiaries are the same persons. So potentially with the, say, the husband and wife transfer of property, if they're both, the husband and wife are both the trustees and they are the beneficiaries of the property, then potentially you could come within this co-ownership trust exclusion. Where we're kind of trying to kind of get a little bit more clarity at the moment is, of course, over things like bank accounts, because what you will notice in this list is at no point have I said there is any general exclusion for bare trusts, and it is not uncommon for bare trusts to arise, particularly in the situation of bank accounts. Now, really helpfully, we are expecting some changes, some additions to the exclusion list. Again, hopefully in December this year, we'll see some draft legislation to exclude child bank accounts. So again, that's a kind of classic bare trust situation or potentially an explicit trust, depending on how it's set up. But you've got the bank account in the name of, say, the parent or the parent managing it, but it's for the benefit of the child. So it doesn't fall within the co-ownership definition. So they're going to make some specific legislation to exclude any bank accounts that are opened for children or also vulnerable people. Now, one of the things I asked about is, well, what happens if you have, say, an adult where someone else is managing the bank account? So another common situation would be, say, an elderly parent, and particularly during COVID when it's been challenging to manage assets, or if perhaps haven't wanted to go and do online banking, it may have been that children have been added as signatories to help manage the account. And there was some discussion over whether or not that would come into scope. And at the moment, the sort of the thought at the moment is that actually where you're adding on an adult child to their parent's bank account, that you're not necessarily creating an express trust. And there is a suggestion that the courts would actually view that as a resulting trust, and therefore it would be out of scope on that basis. And this is something that Hmrc are going to do some work and investigation on, just to kind of confirm that, because again, it's an area of concern and one where we're going to need a little bit of clarity.
Okay, thanks, Helen. If I just took a couple of questions here. Got one from Cameron. It mentions unregistered charitable churches are excluded. Does this extend to all places of worship?
Ooh, good point. I'm just thinking, have I got my list to hand? I haven't. I will have a look. I would have expected it to. Yeah, I will have to have a look at the exact wording of that. It's Regulation 3A. I will have a little look at the wording and see if it's all places of worship. That's an interesting point, because you would expect it, you would think for kind of equalities regulations that it would need to be fairly inclusive. I will have a look and see what the wording says. I'll see perhaps at the end of this if I can just grab from my pile what the regulations say exactly, and we can perhaps have a little look at that again.
Okay, thank you. Pilot trusts, is it the initial £100 value or the current value?
I would say it was the current value now, because if I go back, what did I have on my slide? The point is, once it exceeds £100, it has to be registered. So you might have put £10 in it 20 years ago when you created it, but if since then you've added a couple of £100, and it's worth more than £100 on or after the 6th of October 2020, I would say that you would then need to register it. So I would say you need to look at the current value, because that's the kind of, the idea is that when they get over £100, you need to bring them into scope. So I would say you need to be looking at the current value of a pilot trust. You can't just say, oh, well, it had 10 quid when I started it. We'll leave it out at that, on that basis.
Okay, thank you. A question from Keith. The adult bank accounts, do lasting powers of attorney create registrable trusts?
Good point. I don't know, I have to say. Yeah, I'm not sure whether that would create a trust. That sounds like another thing that we need to make sure that we get in the manual, because again, one of the things that we're trying to do with the manual is we're trying to help Hmrc get as many situations in there as possible that people might think about and raise concerns about. So I will get that added on the list as to whether or not that is in scope or not.
Okay, thank you. The children's bank accounts, once the child becomes an adult, if the account continues, which it often does, will this have to be registered, or is this a resultant trust? From Nick.
Well, I'd have thought at the point the child turns 18 that they would then be both in sort of the beneficial owner and in charge of it. So I mean, unless the parent is intending to maintain control over it and maintain the bare trust, but I mean, generally I would have expected the bare trust to kind of cease at the point when the child turns 18 and the account to be dealt with by them. If not, and the child was vulnerable for some reason, then there will be a vulnerable person exclusion, so you might look for that. But otherwise, I mean, if you were going to keep a bare trust and the parents were going to stay in charge of it, then I think you might have to think about that quite carefully. I'm just struggling to see the circumstances in which the child wouldn't that it wouldn't come to an end at 18.
Okay. Gemma would like the point clarified, just to confirm, do bare trusts in general need registering?
In principle, yes. So the basic principle is that a bare trust is within scope, but you need to then go through all of the tests. Well, is this bare trust like an express trust? Does it fall within all of the exclusions? But in principle, you can't just ignore your bare trust. They do need to be thought about, I'm afraid.
Right. We've had a couple more comments concerning the £100 limit. Really, the pilot trust, is it equal to 100,000 or is it less than or more than? What happens if it's dead on £100?
I should have kept, if I had the list to hand, because this is the kind of detail where I would need to look at the regulations as to precisely what the wording said on it. So have I got my exclusion list to hand? And I should have sat down with my exclusions. I haven't got the exclusion list to hand, but if I can grab it afterwards and have a little look. But this is a case of, it's a case of just reading exactly what the wording says within the legislation as to whether or not it's exactly 100 or whether it's £99 and 99 pence.
Okay. We've got one from David. Suppose they have a partnership, e.g. doctors and solicitors who own property. Property cannot have more than 4 names on the register, but there may be, say, 20 partners. Does this mean that virtually every partnership on the land will have to register? Because PS, he says, co-ownership rules won't apply because not identifying between trustees and beneficiaries.
I think the question then is, well, because that trust that arises on having multiple owners, I just wonder, would you not then come out under the first exclusion of the fact that it isn't an express trust on the grounds that it's a trust that's arisen through statute? So I think it's a question of the kind of the land law. So if that trust has arisen because landlord determines that that's how you have to hold it, then it wouldn't be express. If you've done something different and you've put an express trust in there, then that would be a different kettle of fish. So hopefully that helps a little bit. You'd need to understand more exactly about why that trust has arisen. Has it come about as the operation of land law? And it may be something that you might need to run past a solicitor to understand the precise nature of it.
Okay, thank you. And lastly, before you move on, is there any estimate of the number of trusts that now need to register that didn't before?
No, we've been trying to guess that. It's literally a finger in the air. No one has any real sense of how many are out there, and it's also so sensitive to the exclusions, because initially, particularly around the kind of the life and the health policies, it's difficult not to imagine that potentially there are millions of those out there. But if most of them are excluded, then the impact on the trust register will be less. So no, there's no kind of official guess. I've seen all sorts of numbers from 2 million to 6 million. Nobody really has any clue. It's a really difficult area for Hmrc because the whole point of a non-taxable trust is that it's probably not really engaging with advisors. It's not registered. They kind of just sort of sit there in dusty archives in solicitors and accountants' offices, and trying to explain to people that this trust now needs to be formalised and registered on this register is going to be a nightmare. And it is appreciated that that's going to be such a challenge. There is going to be quite a soft touch penalty regime around this, around the whole process of registration, just because it's going to be so easy to overlook trusts and miss them off. So if Hmrc spot a trust that should be on the register and isn't registered, they're going to write you a letter and saying, please register it. And they're only going to start penalising people if they don't respond to the letter, simply because it's just going to be such a challenge for people to appreciate that they need to be on the register in the first place. I keep getting asked for my ideas as to how to tell people with non-taxable trusts that they need to be on the register, and I'm out of ideas now. It's really difficult for to kind of get that message out there. So yeah, without having a figure, we're never going to know if we've got them all. It's always going to be a little bit hazy, I'm afraid.
Okay, David's come back on the point about the £100 limit. That an article in taxation of 22nd of April said it's less than 100, so 99.99.
Right. Yeah. I mean, without looking at the precise wording, I can't say one way or the other. But it shouldn't be that difficult to. I say if I had it to hand, I would check, and we could. I'm sure we could resolve that fairly straightforwardly. But I'll take a comment in taxation.
Yeah. Okay. Well, if you want to crack on, we'll come back. We have got more questions, but I'll come back on them a bit later on. Let you crack on. Thank you.
Lovely. Yeah, so in next stages then, having gone through that trauma, which is probably going to be the worst bit of does it need to be on the register or not, the next issue is what do we actually need to put on the register. So I'm going to focus here on the type A trusts, so non-taxable UK trusts. And what the regulations say is required are the details of the beneficial owners. So that's a term that was used, hopefully again familiar to people from the initial 4MLD, but what we're looking for here are sort of, so it's the settlers, the trustees and beneficiaries generally will be classed as the beneficial owners. Now, will also be required to provide some information on controlling interest in third-party entities. So this is something that is new. And it's really, again, it's quite difficult for me to judge how big an issue this is going to be because none of the trusts I ever acted for had a controlling interest. But it's certainly not in something in a third country. So what we're looking for here is by third country, something that is outside the UK and also outside the EEA. On the grounds that if it was an interest in the EEA, it would have been probably the trust picked up on another European, another sort of European country's register. So what we're looking at here is, say, New Zealand or Australia or kind of America. And if that trust has more than 50% of the shares, the voting rights or the influence of that company, then you'll be required to disclose the company's name, the location and the registered and principal office. So this is quite an interesting thing. If you do have one of these trusts, it has quite an impact on the access and how transparent the register is. The register is more transparent if you're a trust with a third country controlling interest. So again, I've never seen it in practice, so it's difficult for me to comment, but if you're in that scenario, it is something to think about, that the register will be more transparent in respect of that trust. Going back to the beneficial owners though, which is hopefully where, well, every trust is going to have these to register and where you're going to be focusing most of the efforts. For an individual beneficiary, hopefully the information is going to look fairly similar. So name, month and year of birth, country of residence, nationality and nature and extent of beneficial interest is what the regulations say. There's a bit of a gap here between what the regulations say and what the service itself is asking. So the service will ask you in practice for the full date of birth. And we kind of queried that with Hmrc, and their view is that they can ask for this additional information because it's kind of more practical and more sensible to ask for a date of birth rather than the month of year of birth. And I get that. But I also made a representation on behalf of the ATT before all of this kicked off, suggesting that we had the same information for all types of trusts to make our life easy. And so I was a little bit disappointed that that wasn't taken on board. Country and residence and nationality are new. They're not information that you will have provided to date under the old regulations. Nationality hopefully shouldn't be too difficult because it won't change. Country of residence, again, this is another one of those which is a little bit hazy because of the interaction of residency isn't determined necessarily at a point, it's over a period of time. And what I haven't really got to the bottom of with Hmrc is exactly kind of what they're after. So they have put some guidance out in their manual on what they're after in terms of country of residence, but I don't think it's quite as pragmatic as I had hoped that it might be. Because I think it needs to be clear, if you're updating the register in May 2022, say, are you declaring your country of residence for the previous tax year or just sort of at that point, or you may not have established it. It depends what the year end of the country is where your beneficiary is resident. It can also be quite, it's not entirely uncommon for you to have quite mobile beneficiaries, so you could be kind of updating this quite frequently. So I'm hoping that I would be really grateful to hear some more sort of practical, if people think that this will give them issues in practice and kind of how that will play out, and see if we can persuade Hmrc to just be a bit more kind of pragmatic around that. And then if you have any of your beneficial owners are companies, say a trust company, again, it's fairly straightforward: company name, registered office, and the nature of the company's role in the trust. The next issue then is deadline. So the legislation at the moment says that we have to do all of this by March 2022. but we didn't get the service. The service didn't open for the registration of non-taxable trusts until the 1st of September 2021, i.e. last month. So what we're expecting later this year is some regulations to change those deadlines. So any non-taxable trust set up by the 2nd of June 2022 should be registered by the 1st of September 2022. I've put the June date in red because that's the Hmrc have worded it very slightly different, and you'll see if you see any of the wording from Hmrc, but they have confirmed that what they've said is any trust that's created more than 90 days before the 1st of September will have until the 1st of September. So I think, to me, if you're working to the 2nd of June 2022, they need to be on by the 1st of September. From the 2nd of June 2022, any new trust needs to be on the register within 90 days of creation. Originally, and the legislation currently says we were given 30 days, and we, CIOT, all the other professional bodies, applied quite a lot of pressure to say 30 days is just not practical. That's too short a time period to get things done. We're already having problems with the UK Property Service. Let's not bring in another 30-day deadline elsewhere, and Hmrc have taken that on board and extended it to 90 days. And then you need to update the register for any changes to the information that's held within 90 days. Now, again, this is another one of those things where it depends how subtle you want to be. If you look at the regulations, my reading of them is that you only need to be updating changes to beneficial owners within 90 days. And there is some sort of fixed standing data, particularly for taxable trusts, sort of details around its assets and so forth, that doesn't need to be updated or only needs to be reviewed annually. But in practice, whether it's worth every time something changes, you want to check, well, do I need to do this within 3 months, or can I wait until next January to do it? You might find it easier to operate on just something has changed, let's update it. I'll leave that to your own judgment, but certainly if you read Hmrc's guidance, it very much gives the impression that everything has to be kept up to date within 90 days. And to my reading, that isn't entirely what the regulations require. So that's kind of a quick whistle-stop tour of the non-taxable trusts. There's also an impact on taxable trusts. So one of the things when I was running through the data that you needed for beneficial owners, you will have noticed I talked about country of residence and nationality, and that's something that needs to be added on to taxable trusts. So that's kind of new information they wanted for non-taxable trusts, and therefore they've also asked that it's added in for existing taxable trusts on the register. And also this question of nature and extent of individuals' beneficial interest. Now I'm doing some work on that at the moment, because a member has reported to me that they're not really clear how that question is being asked within the service, but the regulations do require that information to be retained by the trustees and for it to be disclosed. And my understanding is that the register does ask about people's entitlements to income, and it may be that that's how Hmrc has interpreted that question. It's not how I would have interpreted it, but I think that's how Hmrc are looking at it. So that's something that we are, as I say, still trying to get some guidance and clarity as to what Hmrc are trying to find. So that's where I say it is still a little bit of a moving target, that we don't really have full certainty over quite what we're aiming at and what Hmrc want us to do. I've also put in red there because it's not in the regulations, but you will have noticed if you've been on the register getting questions about mental capacity, and this again will apply to taxable and non-taxable trusts. So it's not part of the register sort of regulations that you have to say it, other than Hmrc need to know whether or not any of your beneficial owners lack mental capacity, because if there is a request from someone to access information on the register that they hold, they will withhold details of anyone who lacks mental capacity. And so hopefully in the last few weeks, if you've been on the register, you will have noticed a change, because the initial question was, does this person have mental capacity? Yes, no. And obviously a lot of people might have felt that they didn't really kind of know that formally, they hadn't necessarily done an assessment, and they didn't really feel confident answering yes or no. And Hmrc's guidance says that they don't expect you to do additional work to answer this question. So you're not expected to go and do a mental capacity review of all your beneficial owners. But if you have done work on it and you were concerned about a beneficiary, for example, and you did get them assessed as lacking mental capacity or lacking it in certain circumstances, then you could then record that, or should then record the work that you've done that answer on the register. But if you haven't felt the need to worry about mental capacity, then it isn't a question that you will have addressed, and you're not required to do extra work. But what you can now do is there is a don't know option. So if you would rather not say, or if you feel that you don't have the knowledge or experience, or you just don't feel that you also feel that you just don't feel it's appropriate to answer that question, you can just say, I don't know. And we're working on Hmrc to get some more guidance out there to say that don't know also means I don't want to answer. We can't get the option to say I don't want to answer for various reasons. The system is set up as it is now. But I am aware it's giving people quite a lot of concern, but I don't know can also be read as I don't want to answer this question. And for many of you, you may find that more comfortable. We're working on getting a fourth option. There can apparently only be 3 options within the system the way it's programmed. We're working on them putting a fourth option as not applicable, because we're getting asked reports of people being asked questions about mental capacity for a deceased settler, which is obviously irrelevant, and for that we need a not applicable. So again, it's a bit of a, you may see the service change as you use it and as it's developed. So again, we're back to this moving target. It's also necessary to add in any controlling interest. So when I talked about having a more than 50% sort of interest in a company or entity outside of the UK and outside of the EEA, then again, you need to add those on for taxable trusts. And that kind of more or less brings taxable trusts then in line with non-taxable trusts, other than there is a sort of fixed kind of standing data about taxable trusts, about their advisors and administrators and their assets, which you only need for a taxable trust. Yes, I had a little bit, just going back to the residency, I kind of talked about that before. What Hmrc had said, their latest guidance is they say that where the residency changes between tax year, they're expecting you to update the TRS with that change once the position for that tax year has been established. And if you've got more than one country of residence, then that's fine, you can choose whichever is appropriate, but if one of those countries is the UK, then you should always opt for the UK. So there is a little bit of guidance there, but I'm just not really clear whether you're trying to assess it on a UK tax year, quite how they want that question phrased. In terms of taxable trusts, similarly for deadlines, it's the 1st of September 2022, and we'll get regulations through to change that. And again, it's a 90-day period once from the 2nd of June 2022. If a trust acquires a tax liability within 90 days, they will need to register. And again, I'm really sorry, another area of uncertainty, because what date is the tax liability? And again, this is up for debate. If you have a trust and it starts renting a property on the 1st of May 2022, and you're going to anticipate that you're going to pay tax on that, did they incur a tax liability from the date that the income source commenced, so the rental started on the 1st of May, or do they acquire a tax liability at the point that that tax is due to be paid, which for the 2022-23 year would be January 24? And it just seems a really basic question, and that is still something that we're working on to establish. I have a view, my colleague equivalent at CIOT has a completely opposite view. So again, the theory is within 90 days of a tax liability, but we need much more guidance and clarity over what, and we need to agree with Hmrc what we are considering when we are considering the tax liability to start for something like income tax, which is a sort of determined on a periodic basis, whereas for stamp duty land tax, the tax liability arises, well again, does it arise at the date of the transaction, or does it arise when it's due? I would say transaction. I have seen other people argue that it's the date that the tax is due, and again, all of that really does need to be ironed out so that we can use these rules in a practical manner. And at the bottom of that slide, I just mentioned the service for the additional information for taxable trusts has been open for a few months now, so hopefully you've all seen that and have started bringing them up to date. For new relevant taxable trusts, the deadlines are a little bit unclear and I'm not quite sure how they're going to change. So I've put in red how I think they're going to change. So I'm expecting that if you were set up before April 2021, that you will follow the old January deadline rules. But I think if you set up on or after the 6th of April 21 and you incur a liability before the 2nd of June, you'll register by the 2nd of September. Otherwise, it's 90 days. But again, you can see, without me being able to tell you what is considered the point at which an income tax liability arises, is it the date that you start the source? Is it the date you pay the bill? I'm not sure how you can then establish where you sit within these deadlines. So appreciate it's so frustrating that this is unclear, particularly almost, well, a year after the regulations came into date, but we are discussing all of these things with Hmrc. And then again, we have the requirement to update. So this is where it's a little bit more complex. So that what I call standing data, the name, the date of the creation, country of residence, contract address, anything that was in the old regulations, you only need to update by the 31st of January following the tax year for a taxable trust. But all of the new information required by 5 MLD, nationality, residence, the nature of interest of the ownership, you're supposed to do within 90 days of becoming aware. But if you read Hmrc guidance, they very strongly infer that everything needs to be updated within 90 days. So I would take your own judgment on how is just practically easiest for you to manage those updates. The final section is then on access to the register. I don't know if you had any further questions on taxable trusts at all, Kevin, before I do the access session.
Yeah, we've got a fair number of questions. Before I rattle through some of them quickly, does a public register exist of trusts?
It will do from the 1st of September 2022. I'll cover that in the coming slides.
Okay. Are there penalties for not complying with the 90-day deadline? I'm thinking of beneficiaries changes where we're not notified usually more than annually.
Yes, there will be penalties. What the legislation says is becoming aware. So there's going to need to be an education where you need to educate trustees that when they become aware, they then need to tell you so that you can do it. So yes, there are potential penalties for failure to update within the timescales.
Thanks. So Pam's tried repeatedly to do the annual confirmation to the trust register that there have been no changes. The screen just says the trust is being updated, please try later. She's been trying for 3 months now. Why is this happening? She's managed to do it for one, but no others.
That's very odd. Has she tried the online help service desk? That's not an error I'm familiar with. I would have, sometimes there's a get help with this page at the bottom right hand side of the screen, and you can kind of trigger an alert to the online help services. Otherwise, I would definitely give them a call. But you could try the trust helplines first, but they might send you through to online help services. That does sound odd, and I've not had many reports of that, so I think that's something you'd need to follow up with Hmrc. There are specific trusts that seem to have got stuck in dead ends, and I just wonder if that's, unfortunately, Pam's got one of those. So yeah, I'm afraid that's a call to Hmrc and possibly more than one.
Okay. Do complex estates have to register on the TRS, and do complex estates have to be kept up to date each year per the question on the SA 900 Trust and Estate Tax Return?
Technically, complex estates aren't part of the TRS regulations. So the only reason that you need to do register a complex estate on the trust registration service is because you want to get a UTR. So you do have to use the TRS, but you're using it because it's the only mechanism through which you can get a UTR. You aren't, though, part of the regulations, so you aren't actually obliged to do any of the updates. However, what Hmrc tell us is they would appreciate it if people would. So that's not satisfactory, but that's the answer I've been given. So they would like it if you would kindly do it, but technically they can't make you.
Okay. Where beneficiaries are a class, such as grandchildren, do you need to notify within 90 days of birth of another grandchild?
No, I would say not, because changes to you can't really notify changes to a class because you're not doing the details. So the changes really only apply to individual named beneficiaries. So I think for a class, there's sorry, I think it was on my slide and I forgot to pick it up. So no, for these 90 days are applying to individual named beneficial owners.
Okay, thank you. How does the mental capacity question apply to under 18s?
I mean, to me, it would be a not applicable because details of under 18s will not be disclosed. Again, this question is only to do with the access to the register, and details of under 18s are not going to be disclosed regardless of mental capacity. So for the time being, I would say you could say I don't know, and potentially if we can get a not applicable, then I think you would argue that it was not applicable for under 18s.
Okay, thank you. If the trustees of a discretionary trust distribute to different beneficiaries in different proportions each year, does that need to be reported as a change?
Oh, good question. I'm on with that at the moment because it's not. It's that understanding of, is that part of their nature? I'm trying to think of the sort of the phrasing, the extent and nature of interest, and we are trying to work out whether that there is a question within the service that says sort of what entitlement to income or what entitlement to capital have you got, and it's not a terribly flexible question. And I would say that because that question is in there and it's changing each year, we just need to get some guidance from Hmrc as to whether or not they're expecting us to do that. So it's something that we're on with, and I'm afraid it's on my list, but I can't answer it until we can get some more guidance out of Hmrc.
Okay, thank you. How do you answer the mental capacity question if the settler is deceased? Can you
Again,
just put
at the
don't know?
moment, yeah, again, at the moment, don't know, because again, it's where we need the not applicable. We've been told we can have up to 4 options, and that it was yes, no. They've added on I don't know. I would have preferred, I prefer not to say, but anyway, we've got I don't know, and it's supposed to be the same. And yeah, and one of the things I'm going to go back to Hmrc with is, can we have a not applicable? Because it's the only thing that I think makes sense. But in the meantime, I don't know is your best bet.
Okay, we've got another question regarding the gateway. I think Andrew's tried to set up a new government gateway ID. We entered passport and last tax return details, and gov.uk said it couldn't prove the identity. We tried the telephone number, but there was no response, and the email help said response would be within 2 days. My question is, how does he resolve this?
Yeah, well, the thing is, that sounds like I'm not sure whether it's the gateway for the individual trustee, as in their ID, or whether they've not been able to match a trust that they've already created to claim it to do it online. If it's, I'm really sorry because I'm stuck. The only thing I can say to him is to keep doing what he's done, which is to try and do, if you can find a get help with this page and try and kind of trigger any kind of error ticket within that system, that may well get, that's supposed to get online services to get in touch with you. I've had really mixed feedback. Some people are getting a good service and getting very quick responses, and some people it's taking a long time. So I think I'm really sorry. The only thing I can say is you will have to try again. If you can't get through at all, the only other option is if you're on the agent forum at all, if you want to sign up to the agent forum, then it is also possible to raise operational concerns through there, and that might be a fallback route.
Okay, thank you. Now we've still got a number of questions. So Helen, I don't know whether you want to finish off your webinar, then those who want to stay on, are you happy to take?
Yep, that's fine. If I just do the last sort of couple of slides.
Yeah,
so just access to the register. This is I think one of the things that it's really difficult for me to judge how much of the concern is how concerned we really need to be about this. But at the current register as it stands, Hmrc, law enforcement agencies can access details on the register, and I don't think any of us would have any concerns with that. From 1st of September 2022, anyone who has a legitimate interest can access details on both taxable and type A and B trusts. Now, by legitimate interest, what I mean is they need to be able to evidence suspected money laundering or terrorist activity. So this potentially could be your investigative journalist who considers that your trust is potentially being misused. The process, Hmrc are still going through the process of deciding what this is going to look like. So they're going to have to provide evidence. It's up to Hmrc to determine whether or not that evidence is sufficient for them to release details. You will never know. They're not going to tell trustees if their information has been released. They're not going to tell them if a request has been made, and they won't tell you if a request is refused, and Hmrc may refuse. If they accept that there is strong evidence and there's a legitimate interest, then they will release certain information about the beneficial owners to that individual making the request. But they won't disclose information if the beneficial owner is a minor, if they lack mental capacity, which is why we're answering the mental capacity question, and they will also not disclose if there is any risk of fraud, kidnap, kind of harm coming to the trustees. That isn't going to form that requirement of fraud, harm, or sort of kidnap, blackmail. That risk isn't something that's going to be a yes/no question within the TRS. If you've got a high-risk trust for whatever reason, you're going to need to write to Hmrc separately. And again, we don't have the process for that available or designed. It's something Hmrc is still working on. But if these requests, if you think there's a genuine kind of kidnap risk because you've got a particularly interesting trust, then keep an eye out for what that process is when it comes about. The other kind of issue that we kind of need to think about is there's a second form of request, which is called a third country entity request. So I talked about the controlling interest that your taxable or non-taxable trusts might hold in non-UK, non-EEA companies. And if that is the case, then the third country entity request can be made by anybody, and they don't need to demonstrate a legitimate interest. So if I know that your trust has 60% of an American company, I can make a request for information about that trust without generating a legitimate interest. The reason being that it's considered that there's a transparency requirement in understanding who the ownership, who the sort of majority owner of a company would be, and to be able to follow that chain of ownership through to the trust. So again, I never had any trust that had a third country entity in that way. If you have, then that I think is something that you do need to, my personal view would be that's something that you need to advise the trustees about, that from September that these requests may well be possible, so that they're aware of that. And again, the information supplied is the information that is required under 5 MLD, which are the various sort of details about the beneficial owners. So in terms then, and then as I've mentioned, that the vulnerable beneficiaries will be protected. The final two slides are, well, what do I do now? Well, darkened room, tea, coffee, damp cloth, I think. The main thing is to try and start this process, if you've not already, of what additional trusts will be in scope. And you may want on a few things, just to, for example, sort of say bank accounts and bare trusts, you may just want to sit on those until the end of the year when we've got a bit more clarity on precisely how some of those exclusions are going to work. And again, having kind of, it's a systems processing things in terms of, well, how are you going to process registrations? How are you going to process updates? And then it's an education kind of process for your trustees, so that they're aware that whereas previously they might have had an annual touch point with you, they need to get and keep you in the loop a lot better. And they need to kind of think a little bit more, particularly if you've got mobile beneficiaries, of how they're going to keep in the loop about what they're doing. In terms of sources of guidance, I think Hmrc's manual is going to be really key. It's going through a process of iteration, and the professional bodies are kind of commenting on it, and we've got the opportunity to feed back. So if you feel that the manual isn't covering points, I mean, there's been a few things that are going through today where I've thought, oh, I'm not sure that's in the manual, and I think it needs to be, then you can feed into your professional body and we can get those raised, or you can feed in directly through the various sort of feedback options at the bottom of the page. But keep an eye on it, and also keep an eye on it for this update we're anticipating in December. There is an Hmrc overview. I'm less thrilled about that because I think it loses a lot of the detail, so you may or may not find that helpful. On the ATT website, I am maintaining a kind of practical guide, so not the detailed technical work, but just as we learn issues about the practicalities of using the system, we have a guide on our website. And then I've also put a link on the slide for when it comes round to the money laundering and terrorist finance regulations, so that you can see there's a couple of questions I think that we probably could have answered if I'd say got the exclusions list in front of me, and so that might also be helpful. So hopefully that will give you a bit of a sense of what we're facing. I'm so sorry that I can't give more definitive answers on a lot of areas. I think it's one of those things that with particularly again, COVID has not helped in terms of it hasn't been a priority, and yet there is still an awful lot of work to do. I think the only thing I would say in the sort of, yes, there's a lot of stuff still outstanding with Hmrc, but the team that we're working with, they are engaging with us. They are very good. The lady in charge of it is quite impressive. So I am hoping that we're going to make some progress. But I think both, but Hmrc I think would acknowledge that it is understood that still having so much uncertainty a year out from these rules coming in isn't a satisfactory position. But happy to take more questions and see if it adds to my list of things to follow up, or if I can resolve some of them.
Thanks very much. When a person becomes absolutely entitled to settled property, there is a deemed disposal by the trustee and reacquisition in his capacity as a trustee within Section 61 TCGA 92. Section 61, Section 60 Para 1 mentions bare trust nominees. In this situation, is it the case that the old trust would be closed on the TRS and registration of the bare trust nominee arrangement required, or can this be treated as a continuation and update?
Good question. Not sure what they would want in that situation. Because I'm just trying to think whether any of the history or detail on the TRS is going to be not relevant. I think that's one, I'm really sorry. I think that's one that's something that we need to raise and have a question about. Yeah, okay, so I think that's one we need to go back to Hmrc about, as to understand what they're expecting. Just because it would be really disappointing to close it and then find that that wasn't acceptable.
Okay, we have a question on winding up trusts. Under 5 MLD, will non-taxable express trusts being wound up presently before June 22 be required to register under the TRS, only to be marked as ceased immediately?
Really, really good question. Yes, yes, I'm afraid that is the current position. It's so frustrating. Yeah, what we've asked, I've asked about 2 categories of trust, because to my mind there's 2 things. If you were in existence at the 6th of October 2020 when the rules came in as a non-taxable trust, and you wound up before the 1st of September 2021, you physically could not have got yourself on the register because the facilities didn't exist. And my personal strong view is I don't see that you should have to register and then deregister. However, Hmrc's view is that if you were in existence at the 6th of October 2020, then you need to go on and then come off again. And we have tried. I'm not sure we're getting anywhere with it. I think the form of wording is on the HET website. If it's not, I'm going to certainly get it up in the next couple of weeks, but I expect to hear howls and the gnashing of teeth. But yeah, I haven't managed to get it for those before 2021, and I don't think that for anything shut between 21 when the trust, September 21 when the trust register opened, and September 2022, I don't think we have a hope of getting those out because the register's in existence. So I mean, we can keep pressing on, but yeah, it's a no, I'm afraid. It needs to be on.
Okay. I'll just ask a couple more, because we have a few. We're unsure of the best course of action when a trust ends. The trust cannot pay out funds until tax is finalised and professionals' fees paid, but then you can't finalise matters until all funds are paid out. Usually we treat these final undistributed funds as being held in a bare trust, but then this creates further issues, as the bare trust presumably would need registry. Any advice?
I'm trying to remember how I used to do this in practice. It's been a long time since I've wound a trust up, and I didn't have the TRS to deal with. I mean, presumably it's already on the TRS, so I'm not really sure what you would gain from shutting the record down, creating a bare trust, registering that and deregistering that. it would seem more sensible just to wait until you got the end and you had actually given. I know you've got to wait till until you actually the final cash has left and then shut it down on the TRS. My gut feeling would be that that would be the simpler solution. I'm not sure what you'd gain from formally setting up a bare trust within the TRS structure.
Okay, thank you. Will we need to register trusts with UK beneficiaries set up overseas where trustees are still overseas, or when they become UK resident?
That's then when you're in the Type B or the Type C situation. So the UK beneficiaries is not the test, but it's presumably it doesn't have any UK income sources or assets, so presumably it's not generating UK tax liability, so it's not taxable. And then the question is it a Type B or a Type C? And that's then going to be around whether or not it acquires land or property here, or whether or not it acquires engages a UK advisor. So I don't think the UK beneficiaries are part of the test. You've got to look at the other elements of the trust structure. So I can't give a definitive answer without knowing how it's set up. But I don't think the beneficiaries in and of themselves would be enough to bring you within scope.
Okay, great. Thanks so much. If it says the trust register is being updated, it usually means there's a problem with the TRS. So that's just a comment there, Rebecca.
Yep.
On a 10-year IHT payment plan, does this have to be registered and linked to the IHT return?
This is where we had some guidance on this under the old rules. So under the old rules, the liability arose when your 10-year charge arose. That made you taxable, and then you fell within that tax year, and then you fell within all the rules for 4MLD. But this is where it comes to my point of I'm not quite sure how this is going to work under the 5MLD of the timing of when the liability arises. But yes, if you'd have two things, wouldn't you? So for most of the 9 years, you're a non-taxable trust, so you're going to need to be on the register as a non-taxable trust. At some point, you're going to incur an IHT liability, assuming they carry forward the definition of when the liability arises. That was defined in an FAQ again, so there's nothing on gov.uk, but that was defined as, well, when did the IHT charge trigger in which tax year, and then you would need to become taxable for that year. But this is an area where we need more clarity. But you are going to end up being on the register. You're going to end up adding more information at some point when you become taxable because you've got an IHT charge. And then my understanding is at the moment that the year after, when you become non-taxable again, Hmrc aren't going to delete the information off the register. You will just have that extra information for taxable trusts on your register going forwards. You'll have obligations to keep some of it about beneficial owners up to date, and then it's your choice if you want to update the existing, the sort of the standing data. My personal view would be it's just easier just to keep it up to date than it is to worry about what 90-day, what deadline. I think it's easier just to keep things up to date.
Okay, thank you very much. Right, we're now just at 1:10, so we'll probably draw a close there. We've had quite a few questions. So Helen, can I thank you on behalf of PFP and all our listeners for presenting today's webinar. I think that wasn't an easy topic to do, bearing in mind the number of uncertainties there, but thank you very much. And a lot of our audience there have made some very positive comments and questions. So thank you very much. I don't really like to say anything to our listeners. Or...
No, well, just thank you all for your patience, and I'm sorry that so much of it is up in the air at this stage. I mean, one of the things that's massively helped me has been members in practice telling me the situations that they get stuck on. So when we initially reviewed the legislation, I'll have done that on the basis of my experience of trusts, and we'll have tried to spot as many holes across all the professional bodies as we could, but inevitably we do always miss some. So if you've got something funny, please do let your professional body know. They will genuinely be grateful, and then we can try and get that resolved for you and for everybody else in that situation through the discussions with Hmrc. So really do please keep them coming, and we'll see what we can do to get them fixed.
Right, thank you very much. Lastly, can I thank you all for listening in. I hope you've enjoyed it. We will have another one of our webinars next month. The topic escapes me at the moment, but we will have another one. And we look forward to speaking to you then. So thank you very much and hope to speak to you soon.